I'm Charlotte McLeod with the Investing News Network, and here today with me is Willem Middelkoop, founder of the Commodity Discovery Fund. Thanks so much for being here.
Thanks for the invite.
Yes, and we're here at Minds and Money London. It's the third day of the show. I wanted to ask if you can start by giving me just a brief overview of your background for those who might not know.
Yeah, I've been a private investor in gold and silver and the commodity market since 2002. I'm the founder of the Commodity Discovery Fund, which is the only Dutch-based natural resource fund. We focus on discoveries, and I founded the company in 2008. I've quite a large retail following in the Netherlands because I've been working there as a journalist, market commentator for Dutch TV between 2001 and 2008. I'm also the author of a few books. The Big Reset is the best known, has been translated in Mandarin, Arabic, and that's on the international monetary system.
So I mentioned we're here at Minds and Money London. You were just speaking on a panel. You've got a long-term outlook, and you were just publishing on supply and demand outlook out to 2030 for commodities. Can you give me the highlights right now?
Yeah, we've done an in-house study on supply and demand, looking forward for the next 10 years up to 2030, because we had this feeling that the industry is in crisis. After the start of the great financial crisis in 2007, 2008, not enough money has been invested into exploration, and that's why now 10 years later there are not enough new projects around to turn into operating mines. And demand for commodities has been increasing every year, I think for the last 100 or 150 years. And so now we reach a situation where we see production deficits appear. If we look at silver, silver has been in deficit since the 1950s. That's a very special situation. And because we had all this above the ground stocks in silver, all the old silver coins from the last century, we don't see any physical shortage in silver, but it's remarkable. Another nice example is palladium. We've seen production deficits in 2012. The last 7 years, the industry couldn't produce enough palladium to keep up with the growing demand. We need palladium for the auto catalyst. And now we've entered into a situation which is very interesting for a resource investor, that we see real physical shortage developing in a metal for the very first time. So there's quite a bit of stress in the physical palladium markets. And because of this stress, the palladium price has jumped from to $450 an ounce 3 years ago to almost $1,800 nowadays. And that's a clear example what can happen and will happen in our industry with the prices of certain metals, which will develop into a shortage in the physical market.
So those are precious metals. Did you also look at metals, base metals, other metals? What did you see there?
Yeah, there are a few metals which won't show a shortage, in which we don't see a production deficit in 2030. That's like iron. Mm-hmm. But if we look at the more, the better known base metals for investors, copper, zinc, nickel, they all will develop into this, one could say stressed market in which it will be very, very hard for the industry to supply enough metal to the market, because demand for copper and nickel will grow quite a bit because of the EV revolution, the Tesla revolution. Many people know that the batteries, they contain a lot of lithium and cobalt, but they tend to forget that 80% of the batteries nowadays is nickel. Mm-hmm. And in an average EV, almost 100 kilos of copper is used. And in a traditional car, it's only 15 or 20 kilos. So we'll see huge demand in these metals, and that will give stress in the market.
Let's talk a little bit about how this situation developed. You mentioned that there's been underinvestment in exploration. Is that something that you see changing in the coming years, or will we continue to see that lack of investment?
I'm afraid that the crisis is getting more severe. Mm-hmm. Because the retail investor has, on average, lost quite a bit of money in the last 10 years. So much of the retail demand is gone. And these investors, they fled towards crypto and wheat and pot. So it will be very difficult to have enough investments available to finance all these exploration projects. As you might know, it's very hard to get financing from a more official side, from banks. So the industry is in crisis, and we need to think about how we can fund the exploration sector in the next decades. But I think that most of the time the solution for a crisis like this is higher prices because of a shortage in metals, and that will solve a lot of the problems in the next decades. But in the first few years, there won't be enough money available.
Okay, so for investors, this sounds like it could be a potential opportunity. How would you say they should be playing this upcoming scenario?
You're right, and that's what we always tell our investors. We have 700 high net worth investors, mainly from Holland and Belgium, some from Asia, and we always tell them, this is like a perfect storm for a commodity investor. Markets are so depressed now, valuations are so low, and when you know that 10 years out you'll have this shortage in some of the metal markets, now is the time to invest, and that's what we do. And we're quite fortunate. I think we're the only commodity fund worldwide who've seen net inflows every year since 2008. So where many of the funds here in London who receive more of their funding from institutions, they have been net sellers in the last few years because there was there had too many redemptions. We were quite fortunate to invest more of our money.
Are there any specific companies that you would suggest people look at?
Yeah, we're specialized in discoveries. 75% of our fund is precious metals related, 25% is base metals or uranium related. There's a huge discovery in uranium space done by Next Gen Energy a few years ago. It's still very cheap. It's a great entry point. So Next Gen Energy is a great example. Our largest position is Great Bear Resources, well known, Red Lake District discovery. It has had quite a run, but I think it's still interesting, and I think it will be sold way over $10 a share. It's trading around $6-7 now. We like a situation in Australia, Staveley Resources. They're doing a high-grade copper find near surface. It's part of a huge system. So that's an interesting. So these names come to mind.
So you're looking for companies that are going to hopefully make a discovery. Are there any early signs that a company may be about to do that?
Yeah, then we talk about pre-discovery, and that's always. We have a few situations. We invest in companies like that, but I don't want to name any names because that's always a little dangerous. But as I explained, there's so much demand for great projects. Well, let me mention one company because it's a very interesting situation. I was explaining that nickel will be in short supply. Nickel discoveries are very, very rare, maybe even more rare than gold discoveries. And Sama Resources are on the verge of making a serious nickel discovery in Côte d'Ivoire, Ivory Coast. They have outcropping nickel, quite high grade. And what makes the situation interesting is that Robert Friedland, you might know him, the big mining financier, he sent one of his Typhoon systems. It's quite a special technique to do some more geophysical research. It's a new technique. There are only 3 of those systems available worldwide. Robert Friedland owns this company, owns this technique. And one of the systems he sent to Sama Resources in Ivory Coast for the next 12 months to do some extra research there. And that shows the interest in the project of Sama Resources. And they're still very cheap.
Okay, so really just watching who else is watching the projects could sometimes tell you if you should be paying attention. Yeah. Okay, so just as we wrap up here, we've been talking about supply and demand and how that's going to be a major impact on the commodities sector. Are there any other key themes that you would suggest investors keep an eye on?
Yeah, like I said during my introduction, I've been a journalist. My first book was on the international monetary system and the need to find a new anchor. The dollar has been an anchor for this system since the 1940s. You see countries like China, Russia accumulating quite a bit of physical gold, and that's for a reason, for the same reason. They know that we're in the end phase, the final phase of the dollar system. And the demand for physical gold by central banks, we had 22 central banks buying physical gold last year, is telling you something. So it will be very interesting to see what happens in the gold space, the silver space. I think the dollar will be devalued, maybe relative soon, but it needs to be devalued in the next few years, and that means there will be a gold revaluation. And there was a very interesting report published by JP Morgan this summer. JP Morgan advising all their private clients to halve their dollar exposure and add gold to their portfolios. And that's, I think JP Morgan knows what's coming. So we could see very interesting developments on the monetary side, the QE side, and people need to study that.
Okay, well, thank you so much. I think we'll leave it there. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Willem Middelkoop.